All right, in this video, I'm going to explain my current opinion on the markets. So this isn't financial advice because I'm definitely not an expert, but I do study this a lot and I'm very interested in it. So I'm just going to give you my opinions on where I think the market is, how I'm invested, that kind of stuff. A lot of you in class were really interested in investing, and so we're going to talk about that a little bit. The first thing to know is, most people can't beat the market. So people try and trade around things, right? They try and buy stuff and they sell stuff and they do all kinds of fancy stuff. For most of us, just especially when you're young, just like consistent investing and getting used to everything is a good way to go. You normally don't want to start buying different random things and trading it and doing all that stuff. You can lose money that way. Like if we look at the S&P 500 over here, again, this is the 500 largest companies in the U.S. Over the last 5 years, if you bought any time, except for the last 3 months, maybe 4 months, you would have made money on that investment. And if you go even back farther, so for a lot of people, what you just want to do is, find an index fund that you think is going to perform well, and then just start putting money into it. Maybe it's only $50 every month, particularly in a Roth IRA. That's typically a really good bet. I like to mess around the things a little more. I'm very interested in this stuff, so I like to study it, and I like to test it out a little bit. So I have a little bit of money that I actually play with, that I trade. So I'm going to kind of give you my opinion of where the economy is going, how you can maybe position for it or something like that, or how I'm positioned for it, we'll say that. And and we'll also kind of explain what's going on with inflation and that kind of stuff. So if we think about the current market, let's think about the last few years here. Let's jump back over here. So we had coronavirus hit, and actually let me jump us back here. So let's go look at when coronavirus hit the market here. So right here, 2020, the market sold off, right? We had a crash. And when this crash happened right here, if you were invested in stuff, your value of your portfolio went way down, right? Now, the value of your portfolio, if you didn't sell, is way up again. So for most people, if they just held through that, they were just fine. For me, I would like to sell before the market crashes and then rebuy back in down here and then get these gains as well. So let's kind of understand what happens when the market crashes like that. So when the market crashes like that, the Federal Reserve can come in. Some people just call this the Fed, and they kind of control our money supply. And what they do is they try to stop the crash from getting worse. And so they did a bunch of things, but one of the things they did is they lower interest rates. And so interest rates is what you need to borrow, or the rate of money it cost, or how much it costs for you to borrow money. So for instance, when they lower interest rates, it becomes cheaper to borrow money to buy a house. So we actually saw lots of people buying houses, and housing prices are way up. We also saw lots of corporations buying houses, which pushed housing prices even higher, right? And so basically, an easy way to say this, it's a little bit more complicated, is that the Fed is printing money. And when the Fed prints money, what can happen is the value of a dollar can go down, right? So the value of a dollar can go down, and that's what we call inflation. If you look at gas prices, right, they were about $2.50 not too long ago, and now, at least in Boise, they're around $3.50, right? So that is what we would call gas inflation, right? Food seems to be going up. Housing seems to be going up. So we do have some inflation in this economy, and quite a bit. If we look at the CPI, which is a measurement of inflation, and this is year over year, so this is comparing it to the year before, you actually see this big spike here since the pandemic, right? And it's when you do shut down your economy, you're probably going to have to stimulate your economy by decreasing interest rates so people can borrow money easier so they can help grow the economy. So what happens here, though, is this really hurts people who spend most of their money on daily goods, right? Because if the cost of gas is going up and the cost of a house is going up and food, that really hurts people, particularly the poorest people. And so our latest CPI reading was 7% year over year, which is quite high, right? So that means if you had how could we conceptualize this? If you could buy 100 apples with let's say an apple is $1 and you had $100. That's not how you explain it either. I'm trying to do the math right here, but basically, if you had $100 that you could buy something for $100, now, it's kind of like you only having $93 instead of $100, basically. So you still have your $100, but it doesn't buy you as many things, right? Okay, here we go. If you had $100 and it would have bought you 100 apples, now your $100 will only buy you 93 apples. So that's what inflation is. So you can get less for your money. Now, the question is inflation going to keep going up, or is it going to start going down? And depends how you measure it. But right now, because oil prices are going up, particularly in light of this Ukraine-Russia war, right? Because Russia invaded Ukraine. Russia produces lots of oil. A lot of the world is not buying Russian oil, so we actually see oil prices going way up. Let's jump over here. We can look at oil prices. They're down a little bit today, if I remember right. Oil prices. They're down a little bit today, but they're over $100. And a week ago, they were under $100 per barrel for oil right there. So oil prices are up, which means gas prices are going to go up. And that means when companies have to ship goods around the world, those prices for shipping go up. And we also have wage prices, which are going up because things cost more, so people are demanding more on wages. So we have lots of pressure pushing this CPI, pushing this inflation higher, right? And so sometimes people think you shouldn't have any dollars. I'm actually getting more dollars in this market because I think the market is going to start to go down, right? So I think we might be going into a recession. It's hard to say exactly. I like the Hedgeye model. So this is a chart from Hedgeye, which is a company. I pay for their macro show subscription. I watch it every morning. And their setup, I kind of like their framework here. So it's looking at two things in particular. So these are called the quads, is what they call them. And one of the factors is inflation. So over here we have inflation going down. And over here we have inflation going up and inflation going up. All right, so that's inflation. And then let's pick a different color. Let's do orange for GDP. So growth, which is like how fast the economy is growing. So over here, this is growth increasing. Why is that looking weird? Let's go back here. All right, so here we have growth increasing, growth increasing, growth decreasing, growth decreasing. Okay, so for a lot of the pandemic, we were in quad 2 right here, which means if you were in stocks or Bitcoin or all those things, they did very well, right? Quad 2, we got inflation increasing, we got the economy increasing, very easy to rent or to borrow money. Housing prices going up, that's quad 2 right there, right? People are making lots of money. But now the economy is starting to slow down. And we still have inflation going up. So some people may think we're over here kind of in quad 3, right? Economy is slowing in this orange here, and then inflation is going up. But because this inflation, where are we at? This inflation over here has been so high, the future months that we're going to be experiencing over here, right? Like May, June, July, because we're at 7% and we've been quite high for a while, inflation may start coming down. Although that's in question with the oil prices going up. We got wheat prices going up, so food's going to get more expensive. So it's hard to say if inflation is going to continue to rise or if it's going to continue to fall. Currently, I'm kind of positioned for both. I'm kind of positioned with some cryptocurrency for inflation to increase. And then with the other part of my portfolio, I'm prepared for inflation to decrease with some things like gold and bonds and consumer staples, which is like things people need to survive. So these are kind of things that I'm prepared for if the economy starts to go down and not perform very well, which I am expecting. I could be wrong. People that I like and people that I listen to disagree with me. So we'll see who is correct in the long run. But that's kind of how I'm thinking about this. So a thing why I'm a little bit concerned about the economy as well is, well, there's a few things. One is consumer sentiment. And the University of Michigan has a pretty good consumer sentiment model here. And when consumer sentiment goes down, typically this means people start to spend less money. And typically that means the economy starts to decelerate or starts to shrink or contract, right? Which means people in stocks or investments tend to make less money depending on what you're invested in. Another thing is that savings rates are super low. So the government was sending out checks to people. People's bank accounts were growing. So we had a very high savings rate. But now we have where am I at? Now we have a pretty low savings rate. which is also concerning, right? That means people are going to start spending less money, which stimulates the economy less, and that can lead to some drawdowns. Another thing that is weighing on the market here is we talked about the Fed decreasing interest rates to help out the economy. Well, because inflation is now rising, what the Fed is thinking about doing is increasing. Let's write this again. Fed is thinking about increasing interest rates. Essentially, this is going to make it harder to borrow money, right? And if you increase interest rates into a slowing economy, that is oftentimes not a great idea and can lead to a recession. And so I'm kind of getting prepared for that, right? So I don't want to own a lot of tech stocks because I think they're going to go down if we do go into a recession. You know, it's hard to say what's going to happen in the market, but that's my current opinion on it, is that growth is slowing. Inflation is going up now, but I think it's going to start coming down fairly soon, especially if the Fed tightens into a slowdown. I think that's not going to end well for most people invested in the market. So with that point of view in mind, I'm actually buying, and this is just through my Roth IRA, I'm actually buying some gold, or I buy GLD. I'm just holding dollars, right? Let's just go like that, dollars. I'm buying some bonds in the form of the SHY, that's the ticker symbol if you wanted to look that up. And then I'm buying consumer staples, which is XLP. And so again, this is things people need to survive, so it can be a good thing to buy during a recession, potentially. And then we have like another thing like XLE. This is energy. I didn't get a good position in this, and I kept waiting because inflation is going up, although I was prepared for inflation to go down with part of my portfolio. But now it seems like it is actually going up. So, I don't have a good buy-in point right now for this is energy right here. It's an energy ETF. That's what the E stands for, right? So gas, oil, these types of things. They're going higher, right? Okay, so that's kind of my current market view, is that the Fed is going to start tightening in March. They're going to stop stimulating in March, which means there's going to be less easy money or less cheap money for corporations to use to grow the economy and for people to use to buy houses. And so I think the economy is going to start slowing. And that always is risky if we over-tighten or something happens, especially, with war, Russia attacking Ukraine. That is increasing the cost of oil because Russia produces lots of oil. And so that's going to put further strain on the CPI, right? So then CPI may continue to increase, and then is the Fed going to have to increase more? It's a really tough spot for the Fed to be in. What people always say is, can the Fed land the plane, right? And so they're trying to stop the inflation without causing a recession or a depression. Can they do that? I don't know. I'm not convinced that they can. So I'm kind of a little skeptical right now. So I'm not putting all of my money in the market, right? I have a little bit in there, but a lot of it's just in dollars because I think prices are going to go down. Like maybe I'll get Tesla for cheaper, or who knows what stock, Apple, or different things like that. So this is just looking at rental inflation. Rental inflation tends to lag in the CPI. So if rent prices continue to go up, that's going to cause the CPI to go up. So again, I'm preparing for the economy to slow, but I don't quite know if inflation is going to continue or if it's going to slow down. I'm positioned a little bit for both. And so my other positions for if inflation continues to go would be XLE. It would be something like Bitcoin, Ethereum, Cardano. So that's kind of how I'm viewing this market. If inflation is going up in quad 4 or quad 3, that's good enough. Okay, so that's kind of my current view. If you have questions, let me know. You can leave them in the comments below. And before I end this video, I just want to give you some resources here of people who I like to follow. So one, that quad thing comes from Hedgeye. They have a YouTube page. You can't watch all of their videos. You got to pay for a lot of them. But Hedgeye, I like their models quite a bit. I also like this guy named Meet Kevin. He's on YouTube, and he has quite a bit of free content. I like the way he thinks about stuff. He makes really good videos on how to buy your first house, different things like that. So I follow him. I watch him pretty much every day. I also watch, These guys call it Millennial Money. They put out a weekly podcast. It's 3 younger guys. Right now, they think the economy is going to boom. I disagree with them, but it's good to listen to differing opinions. So Millennial Money, you can check them out on YouTube as well. For an old school guy, they call him the Bond King. I like this guy named Jeffrey Gundlach. He puts out a really good monthly YouTube monthly YouTube video. His YouTube page or his company is called Double Line Capital. I'll drag this over so you can see that. Double Line Capital. So every month I tune in for that. That's where I got these charts from over here. These lower ones. This is from his presentation. So they do a lot of other videos over there. Some of them are kind of dry. I like the Jeffrey when he's given his presentation with all the charts. So I'm a big fan of him. I also like the Uneducated Economist. Let's see here. The Uneducated Economist. And actually, now that I'm listing all these, I'm going to link all these channels down below so that you can just click on those. This dude works in a lumber factory or a hardware store, and he sells lumber. And so he's looking at lumber prices. He talks about the Fed. He just puts out like a daily video talking about what he's watching. He reads the Fed minutes, all that stuff. So he's a pretty good follow, especially if you're interested in the housing market. I like the All In podcast. This is a group of investors. They put out a weekly podcast. It comes out late Friday night or very early Saturday morning, so I usually listen to that on Saturday. And let's see, who else am I missing? I think that's most of them. I also like Cathie Wood. Right now, she's not doing too well, but I bought her stocks a few years ago, and they did very well for me. This is kind of like an innovation fund, so in terms of like looking out towards the future, like 5-10 years in the future, I think she has a pretty good team for that. Right now, with the economy downturning, they're really having a hard time, it appears. But maybe they'll come back if the Millennial Money guys are correct right here. Then Cathie Wood's funds should do pretty well. If Hedgeye, me, Kevin, and Jeffrey Gundlach are correct, they may not do so well right now. But I do like her information. They put out she puts out a monthly podcast as well. Right now, I disagree with her a little bit, but that's all right. Again, good to listen to differing opinions. All right, so I think that's good for this video. Kind of a ramble here, but if you have questions, let me know in the comments, and I will see you in the next video.